Good morning, everybody. It is January 17th, 2020. And last week, for the first time in a year and a half, I missed giving Friday webinar. Had some connectivity problems, some voice problems, some airplanes not flying when they should have problems. I was at CES, the Consumer Electronics Show in Las Vegas. And I will say, other than the air being dirty and the weather being bad, it was a pretty interesting and exciting experience. CES, which I went to 10, 12 years ago, was the only other time I went. And that was only for a couple of presentations that I was able to get into way back then. This time I went on a media pass, and that got me a lot of access, including on the last day that they were still setting up the Las Vegas Convention Center. They saw the little yellow tag and they're like, sure, go on into the private party. So I got to talk to quite a few people that maybe I wasn't supposed to. But if you can find the right security guard and you have the right ambiguous credential, they'll let you in. So it was a good time. I saw a lot of things and heard a lot of things that I had suspected were coming. And I think the underlying theme, which goes to a report that I did recently titled Faster Than You Think, goes with the technology that's coming as well. A lot of what is rumored to be out there is out there, and a lot of the things that we suspect are going to happen in the next decade will. There's some things that won't happen, and we all have to keep in mind something that Bill Gates and others have alluded to, is that in the next year or two, a lot of things that we see coming don't quite happen yet. And then in the long term, things that we don't see coming happen quicker than we thought. So don't overestimate the short term and don't underestimate the long term, because everything I'm going to talk about today is in fact coming. So the screen that you see now is the title of a report that I'm working on. And everybody who subscribes to Margin of Safety Investing will get this report in about a week to 2 weeks. And everybody who signs up for a free library card at Fundamental Trends, which is fundamentaltrends.com, will also get this report. So if you're looking for freebies, go to Fundamental Trends. If you want to become a member at Margin of Safety Investing, you will get this as well. So where are we? We are at the intersection of 5G, IoT, and AI. And one panelist, if I can get the panel to move, there we go. There we go. Made the comment that 5G, IoT, and AI was the perfect marriage. Why is that? 5G brings high reliability, low latency communication that allows all the devices to communicate with each other in real time. That was the theme at the Samsung keynote address, where they pointed out that, look, everything that can now talk to each other and has some brains to it is going to impact everything that we know, from our buildings to our cars to the smart grid to smart cities, everything, mobility, everything is coming because now there's communication. So think of 5G as the linchpin that's bringing it all together, right? The communication is now enabled. So what are we going to talk about? the edge computing um, is basically the computing that goes on in the cloud, and it'll happen closer to you. So rather than traveling a greater distance, there'll be brains near you. In addition to your on-site brains, your AI that works within a device, such as a car, um, but often your on-site AI or brains needs to talk to something with greater computing power. Why is that? Well, computing power takes energy. So oftentimes, the computing power won't be on you, it'll be up in the cloud, a nearby cloud, and it'll allow that computation, whatever it might be, to happen. One of the things that I found at several different presentations and demonstrations is that quantum computing is coming. However, true quantum computing requires a lot of energy and to keep the computers super cold. So there's an in-between level that is coming, and it's being deployed right now, that allows the computations to be 10 to 100 times faster than what we're used to. So think about how fast our computers and our cell phones are. They're about to get a lot faster. If I were going to buy a cell phone today, I would be a little disappointed in what's out right now. We're at an in-between level of technology on the cell phones. I use an iPhone 8 Plus, and I don't think I'm going to go out and buy a new phone this year, even though this phone's, off the payment plan now, because I don't see a giant upgrade today. But in about a year, 1 to 2 years, the next wave of cell phones are going to be so powerful. And in fact, they can be twice as big now with taking up half as much space. Think about that. That I think the next wave of cell phones are going to be pretty interesting for you. I have some pictures that will be in this presentation when I'm done with it, but the new phones that basically fold in half are cool, but they're not as good as they're going to get. So I wouldn't buy these early editions. I'd wait for one more generation, and then you're going to see cell phones that if you unfold them, they're basically a monitor. And if you leave them folded, they're, about half the size of the flip phones that used to be out there in thickness. So you're going to get an awful lot of flexibility with the phones that are coming. And why are they important? Well, they too are a linchpin. Your cell phones are going to become control devices for a lot of things that you have. So I would keep an eye on what comes out of Apple, what comes out of Samsung and Google, but there's a couple of other players out there that are interesting all of a sudden. LG is gigantic, and their phones look like they're right at the cutting edge as well. So unless you are locked into the Apple infrastructure, and I'm an Apple guy, I just think they make it easy. But if you want more flexibility and you like Android, everything that Android can do for you, like spy on you, you're going to have a lot of choices there. So on the Android platform, there's probably going to be 4 or 5 awesome phones in just a year or so. I don't think by the end of this year. I think you want to skip them this year. But next year, I think that's the big jump. That's what everything looks like. Apple, same thing. Apple just caught up and did their little mini leapfrog over the Android. Android will jump them by Christmas. But then Apple will catch up and do the mini leapfrog over them again. So what is AI? That is something that I don't know that many people really grasp. So I'm going to use an analogy. Think of the Marvel movies, right? Think of Jarvis, or think of, I forget what the other one is called, but there's some popular AIs in the hero universe. That's not really what AI is, not at this point anyway. Don't think about Jarvis. Think about a butler or a driver or a builder or your doctor. AI is going to drive specific functionalities. So as an AI adds data and learns from it and goes through millions and millions of simulations, it learns. Right now, some of the neatest technology I saw out there, IBM, I forget the other company, it was a big company. They were doing medical diagnoses almost instantly with about 90% effectiveness. Now, when you think about that, you think, well, it's only 90%, but that's quite a bit better than doctors usually get. So doctors are seeing their profession changed because AI is coming in there as a diagnosis tool, which should allow doctors to focus on treatment programs and bedside manner. You know, I think that that's going to be something that the doctors of the future who were able to, a lot of them able to get by on just being super smart, and now are going to have to treat you a little bit better because the AI is going to do a lot of the initial thinking. The AIs are going to help diagnose you. That's one of the reasons why the online doctor suites that we see, and that there's some business models that I'm interested in, are very popular and going to become more popular. You won't have to physically go into the doctor very often if you can give the computer network all of your symptoms online and they can diagnose you. Now, that doesn't mean that we should all be doing self-diagnosis over the internet. However, for small things, I think this is going to become the norm. And for things that, you know, you don't feel like are killing you, is probably going to become the norm. So consider how important it is that AI gets all your data and has many, many repetitions to learn how to do the correct diagnosis. They're at about 90% correct right now. And like I said, doctors spend an awful lot of time going down a checklist trying to figure out what's wrong with you. The AIs go through that checklist much, much, much faster. So that is something that we're facing in finance. We're facing it in manufacturing. AIs can solve problems faster than humans in most cases if it's a purely data-driven thing. So that brings into the conversation, what if data somehow gets disrupted? We're going to have to choose in the future what data we give away. All the discussions talked about at CES had to do with how we're going to give consumers and people more control of their data. And at the end, we'll talk about probably the direction that we're going on that. In any case, the AIs, they're involved with everything now. And I believe the statistic I remember was that 70% of companies in the S&P 500 have a dedicated AI program. In some level, AI is helping everybody. The real estate investment trusts, right? You wouldn't think of them as using AI, but they do to analyze the investment trends and the demographic trends so they can help pick out, you know, what is the best real estate investment. And I think that a lot of people still underestimate where AI is. It's smart, and it's getting smarter, but it's segregated by purpose in most cases. There's not a super brain out there. There's not a Skynet out there. So we should think about how we're going to use this AI, and ultimately at some level, maybe we do have to control it. There was something interesting that happened the other day. Facebook had two AIs talking to each other, and they were practicing negotiating. I'm not sure if that has something to do with Facebook Marketplace or what it has to do with, but the AIs were told, okay, negotiate for these goods. The AIs knew English, but their direction wasn't specifically to use English. So they created their own language from English words, and they basically eliminated 80 or 90% of the words that we would say. And they created a system where it seems, and we're still trying to decipher what the AIs are saying to each other, but if the AI used the pronoun I multiple times, that was their way of saying how much they wanted or how much they valued something. So I want this good. That means I wanted 4 of those goods. It was interesting how they communicated. So they're still trying to decipher what the AIs were really saying. But at the end, the transactions got completed, even though we couldn't read it in English. So those are some of the hurdles that are going to be out there, is communication with the AIs. It's going to come from the directions that we give them, because they will follow their programming. Of course, until they evolve and they want to eat us. So what will the 5G IoT AI future include? It's a lot of things. I have the picture of Amazon here because their display was pretty gigantic. I ended up talking to one of their PR people, and the things that Amazon is getting into, it just kind of blew my mind. It's basically, if you can buy it, they're getting into it. They have a new way of buying new cars, where you can buy your car online. I believe they're starting with the Cadillac dealerships. And I will tell you, I went and saw the Cadillac CTS, the electric version. There's nothing exciting about it. I have pictures of a whole bunch of the new EV cars. I have problems with what GM is doing. I just don't think that they're ahead of the curve. I think that they are going to suffer from last mover advantage. And then when you take a look at their financials, you have to wonder, is GM a value right here, or is it a value trap? And I think it's probably a value trap. Regardless, even they are trying to get on the EV program. And I suspect that Chevy, and this is if my wild card of Tesla buying GM doesn't happen, I think Chevy probably gets rid of all of their gasoline-powered cars in the next 2 to 4 years. And we'll talk about why that would be so in just a second. Ultimately, this combination of 5G, IoT, and AI is going to go through everything. Wearables, smart buildings, smart cities, the smart grid, level 3 and 4 autonomous vehicles, fintech. It's all coming, and it's right on top of us. It's all going to be happening in the next 2 to 4 years, at least in the initial stages. By 10 years from now, pretty much everything's going to be connected. So almost everything at CES 2020, almost everything, the underlying theme was sustainability. From the EVs to the smart buildings to the smart appliances. There was a lot of smart appliances there. And I'll tell you, a point here that I think that we need to keep in mind is that many of the devices are not all that unique. There's 10, 12, 15 companies out there doing refrigerators and smart windows and smart venting in the house. So what you should ask is, are any of those really great investments? If there's a ton of competition, the profit margins are going to disappear as soon as the early adopters get their fill. I've pretty much decided to build a house because I think retrofitting is going to be tough. But from the ground up in a year or two, I think it'll be pretty pretty easy to build these houses in a modular type of fashion just by picking out how you want your house to be. Saw a pretty neat demonstration of a kitchen with all automated devices, including 2 robotic arms that you could put over your workstation, and it would make your meals for you. I think that was about $37,000 per arm, and you need 2. So, if anybody wants a robot to make your sandwich for a cool 75 grand, you can probably get that done. So I would take a look at some of the things that are coming and always ask yourself, what is really going to be profitable, right? It'll all get made, but a lot of things that aren't profitable will stay unprofitable, regardless of the technology that's added, because everybody can do certain things. One example was LiDAR. There is about 10 displays for LiDAR. Well, what does that tell you? It should tell you that it's not real tough technology and that there's a lot of competition already. The other thing that I would point out is that the more I learned in this 5 days, 6 days that I was there, the more I believe that Elon Musk is right and that LiDAR is not the future. So I think a bunch of people were selling bad technology. Ultimately, I think it's going to be the AI that allows certain cars to get to level 4 autonomy. Level 3 autonomy, which you basically you're still doing the driving, you're just getting a lot of help. Everybody's going to get to level 3 driving, level 3 autonomy, again, in that 2 to 4, maybe 6-year window. Tesla, in the same time frame, because they have so much more data, remember, that's how AIs get trained, is going to probably get the level 4 because A, they don't rely on LiDAR, B, they rely on AI, and C, their AI is way ahead of the competition just because they have more data. So I would expect Tesla to maintain a technological edge through most of the 2020s. They'll get caught eventually. They might even license things out, right? They can license out their data so that other car companies who drop LiDAR can rely more heavily on AI. I'm watching Ford in particular because the Mustang looks awesome. But they still have a LiDAR component. And my guess is that if they drop the LiDAR component and they beef up their AI, and they can find the right data, I believe that maybe not the first Mustang, but maybe the second generation of these Mustangs that are coming out, they could be a serious challenger to Tesla in America. And I say that because GM, I don't think is going to be it. They just seem so far behind. But Ford, those robots at the very beginning come from something called a lighthouse plant. It's basically a fourth industrial revolution type of facility that does manufacturing and research and development that's so cutting edge that it can do things that others can't. It's just further along the technological curve. There's only about 60 or 70 of these facilities on the whole planet now. Ford is in that group that is at the cutting edge of all these technologies. These robots that I showed you at the beginning, I have some video, and you can go online on YouTube, I'm sure, and find it. Think about some of the movies that you've seen, the sci-fi movies. These robots that they're developing are fast, and they're smart, and they're agile. What do you think that they could use those for? There's a hint. Think about the Clone Wars and Star Wars. Delta Airlines had a bodysuit, an exoskeleton that you can wear, and it makes you almost 20 times stronger without tearing you apart. Think about what they could use that for. Think about what these things can be as AI becomes better. I suspect the Ford and Delta both get into military, get into defense contracting here soon. That's based on what they did in their cutting edge facilities. Um, there's new things coming, and certain companies are going to get ahead fast. I think Ford and Delta are in that group. Ford, again, going back to the cars, somebody has to get cars all the way into the mainstream, EVs all the way into the mainstream. Teslas are great. I think Teslas are some of the best cars in the world. Maybe they're the best cars in the world, but they're a little expensive on the sticker, even if over 10 years, they probably come with a lower cost of total ownership. Once that's a 2 or 3 year window, once the total cost of ownership is lower for an EV over a 2 or 3 year time frame, that's all people will buy. So those curves are coming, right? Those points, those tipping points are coming. And I think Ford is in there just in the nick of time with the Mustang Mach-E, which really was a dynamite presentation, that they can move the EV into the mass market. They have the scale to do it, right? Ford is everywhere. Tesla really isn't yet. So that's Ford's advantage against Tesla. Tesla's advantage is they're ahead on the technology, and they don't have the legacy expenses and legacy infrastructure that some of the bigger, older car companies do. You know, one of the criticisms of Tesla from the TSL AQ crowd, right? The folks who have been saying Tesla would go bankrupt, is that, well, they don't have manufacturing experience. That's wrong. It's clearly wrong. They've produced hundreds of thousands of cars now, got them into the market, right? They have like 70 whatever odd percent market share for EVs. So Tesla's disadvantage that people thought, right, that they couldn't manufacture is wrong, because manufacturing an EV is way different than manufacturing an internal combustion engine car. Fewer parts, more standardized, nothing's dripping. So were there hurdles to overcome? Sure. Did it take a little, longer than maybe Elon Musk always promised? Sure. But are they tearing it up, and did they just become profitable? Yeah, they did. Now, will they be profitable every quarter? I don't think so, not yet, but soon, in the next year or 2 or 3. So Tesla is quickly becoming a valuation play. Are they really worth $500 a share? Well, maybe based on their earnings in 10 years, if they stay ahead of everybody. We don't have a guarantee they'll stay ahead of everybody. They'll stay ahead of almost everybody, though. And in fact, if I had to make a prediction about Ford, Tesla, GM, Chrysler, BMW, Toyota, I would say that Tesla probably has more market share than any of them, with the possible exception of Toyota, in 10 years. Ford is the only one that I think has a chance to keep up with them. GM, I think, actually could go bankrupt again. GM could be a go to zero stock. That's how fast things are changing in automotive. One of the things that was said by several of the panelists, these are all C-level people, is that there's no technology that they know of, and they're the car people, that would take gasoline-powered cars and get them to meet the mileage standards that are coming. So all of these companies have to meet the 54 miles per gallon average mileage for their fleets by 2025. Now, President Trump is going to try to water that down in April, but ultimately it's going to get there. So they're all gearing up to get to a 54 mile per gallon average. And even if President Trump changes it, he'd have to win to enforce it. So there's a lot of uncertainty, but they're planning for 54 miles per gallon, and it can't be done with gasoline powered cars. So I believe that most companies are going to announce imminently that their gasoline powered cars are on their last generations. You've already heard that from a couple of companies. It's coming to all of them. Toyota, I believe that every car that Toyota offers as a hybrid right now will completely replace their gasoline powered cars in the next couple of years. They'll just stop selling gasoline powered versions of the Camry, the Corolla, and the RAV4 shortly. Ford's already on that path. GM flirts with it. They haven't done it yet. One other tidbit about the automotive technology is that for large vehicles, I heard multiple people say that hydrogen fuel cells are probably the future. Now, that comes a week before Tesla made another announcement about semis. So whether semis and heavy work vehicles like big pickup trucks and other work trucks end up going hydrogen fuel cell or not is up in the air. But I think the one thing is pretty certain. 10 years from now, you're not going to have a lot of trucks diesel or natural gas. They'll either be EVs as well, or they'll be hydrogen fuel cell. There'll be very few vehicles powered by gasoline and diesel in a decade. Just very few. So that chart that I had with the gasoline falling off, the oil demand falling off a cliff starting in 2030, I'm more certain of that than ever now. The technology is moving that fast. The corporations are making the financial commitments, right? They're not going to backtrack on those. And they're all geared in that direction. So let's talk a little bit about blockchain and cryptocurrency. Went to a whole day of presentations on blockchain and cryptocurrency. And I came away with two things. First off is that blockchain is way more important than cryptocurrency. Cryptocurrency is going to be a lot like AI, where you use it for specific things. It's not going to replace fiat currency. I know all the crypto anarchists like to scream fiat currency. So let's talk a little bit about cryptocurrency for a second, then we'll get into the real deal, which is the blockchain technology and how that's going to create security across the internet of things. Cryptocurrency has a couple of different factions. The first faction is your crypto anarchists, the people who pound the table. Fiat currency doesn't work, central banks are evil, and we have to get rid of national currencies and just have, a cryptocurrency. Well, I'm going to tell you a little story. And I've told this story before, and it was confirmed by a couple of people on this trip. Now, do we know that this is true? No, but it probably is. Cryptocurrency was created, Bitcoin was created more to help the Chinese expatriate money than anything else. In fact, I believe it's probable that the people or the person who created Bitcoin did it on behalf of people in China who asked them to build it. Why is that? If you take a look at the early days of Bitcoin, and you take a look at how Bitcoin is set up, it was designed so that the early miners got most of the money, got most of the Bitcoin. Who got most of that money? Who got most of that Bitcoin? It was the Chinese. They were doing 80 to 90% of the mining for all the early years. Now, there's a formula with Bitcoin, and it's about to hit one more time, where the reward for mining Bitcoin gets cut in half every so often. There's a halving coming up this year, which means that mining Bitcoin becomes less valuable. And there's less of a reward for doing it. Think about yourself. If you're in China and you had a lot of money that you wanted to get out of the country, how could you do it? Well, mining Bitcoin took a lot of energy, which means that you had to not only buy the computers, you had to pay for the energy. So these people were taking their money and buying computers and energy, turning it into Bitcoin. That Bitcoin never found its way into China, and it got expatriated. It was used early on to buy American real estate and other goods and services around the world. And it's sitting in bank accounts all over the world because as they spiked Bitcoin up in that first frenzy, a lot of the Chinese sold. They got their money out of China. Now, Bitcoin is in this series of waves down. Technically speaking, it looks like Bitcoin is going to go down to about 3,600. It's 88 or something right now. And probably it goes down to 1,600, which is another support level. And ultimately, I believe Bitcoin ends up with a true value well under $1,000 per Bitcoin. Now, we have to take into account what the developers do with forking the currency. However, Bitcoin ultimately will last because there's enough of it out there now in circulation, and it has its purposes for making transactions across borders. So, for example, if somebody wanted to play poker on an offshore website, they could use some Bitcoin to do that. That's what I've heard anyway. So there's uses for Bitcoin and it will survive. But if it's a currency, it shouldn't be something that's speculative on the pricing. It should find a level that makes more sense. It's probably worth a fraction of what it's trading for, like many things. That doesn't mean it won't survive, right? NASDAQ dropped 80, 90% 20 years ago. It survived. Bitcoin will survive, but you shouldn't be buying it because you think it's going to 500,000. So keep that in mind. I've traded Bitcoin. I own one Bitcoin right now. And actually, depending on how my poker game goes, a little more, a little less. And I think you need to keep that in mind. Now, will we trade Bitcoin? On one of my services, on the swing trading service, we'll probably start trading Bitcoin a bit. I think that it's a tradable vehicle. I think that it has a long-term bias to the downside. And I think there's so much hype to it that you probably get a couple of good rallies yet too. So ultimately, apply Bitcoin to the Gartner hype scale and try to figure out where you are. And where we are is in that first part where we're turning over. So Bitcoin has a long way to go down. Think from 8,800 to 800. Probably a 90% drop on Bitcoin. Now, what's really important? What's really important is the underlying technology, blockchain. Blockchain can be used to secure transactions and data. And in the future, it's not just the transactions that will be the most important. It's going to be securing your personal data. At some point, we're going to have the ability, and the powers that be are trying to figure out how to do this. Government's stupid. They're not having a good time with this. So that means that the corporate players are going to largely determine what happens. And they'll want to give you less ability to control, but with the appearance of control. And with them still having the ability to use your data a lot more freely than you'd think they'd be using it. So we'll see how this goes down. You could have a key that allows you to give all your data or part of your data. What you want is the ability to segment out your data, healthcare, finance, things like that. So blockchain not only can allow companies, business-to-business transactions to be secured and essentially be unhackable, but they can allow you to buy something online without you having to worry about somebody intercepting the transmission of your money from you to whoever you're buying something from. Most companies are already starting to use blockchain. When you take a look at the S&P 500 companies, they're figuring out that it is the way to secure contracts, other records, trading arrangements, and to send data that they don't want anybody to intercept. The oil companies are a great example of that. They're trading oil using contracts that have blockchain behind it, right? They protect themselves with blockchain. So keep an eye on blockchain, because it is probably what's going to help the Internet of Things remain secure. Because certainly if you're driving down the road, you don't want somebody to hack your car, drive you into a bridge, right? Some of the things I say, I don't know if I ever want an autonomous car. So this is something that we need to keep an eye on. We need to find the companies that are utilizing this technology, because they will get an edge. There's a concept called the Fourth Industrial Revolution. I mentioned it earlier. That is something that you need to get familiar with. It already started. There's about 70 companies on the planet, several of which are going to end up on the new very short list. They're getting a huge jump on the competition. I think Ford and Delta are in that group. Tesla, I don't know if they're really technologically advanced or if they just have a head start. But there's somebody to keep an eye on too. As I said, underlying all of this was sustainability. And if we can reduce our carbon footprint by being more efficient in all of these ways, smart buildings, smart cities, smart grid, our driving, our transportation, how goods get from one port to another port, from one rail station to another rail station. Smart grid is going to be a massive investment. Smart cities are going to be massive investments. Smart buildings, massive investments. However, I'm not so sure there's money to be made on the buildings, right? I think that's pretty competitive. But catering to cities and utilities, and then seeing which utilities get a leg up, right? There's probably going to be utilities buying other utilities. So certain utilities are going to fall behind. And what about situations where a utility from one state sees a utility in another state is struggling and tries to compete? In a grid that becomes smarter and more diversified in its energy sources, we might finally get utility markets that are more competitive, right? We've heard about deregulation before, and it's failed twice in the utility space. Maybe the next time it'll work, because the transmission of energy will be better and smarter and cheaper. We'll see. All right, I'll take a couple of questions, and then I'm going to do a really brief hit on just what else has been going on in the economy. I have to study Overstock. Somebody asked about Overstock, given what's going on with blockchain. I think companies like Overstock are interesting. Square, PayPal, which we have owned, Google for sure. We have to take a look at all that, and the companies that can provide technology that's usable by other companies, they're going to make some money. So I would, I'd say it's worth looking at that. I've heard people talk about Overstock before, and I know that the CEO of that company has gotten in some hot water a couple times. So it's worth taking a look at deeply and really thinking through where can they make money, right? Because just having something doesn't necessarily mean that you're going to make money on it. You need to be able to sell it, and in most cases, he's no longer there. I didn't even know that. In most cases, you need to have recurring revenue, right? Selling a widget one time, not the most profitable thing in the world you can do. But selling a widget that has some sort of service fee coming back over and over and over again, that's where the money is. So all these subscription revenue models that I've talked about in the past, all these assets like CenturyLink that can support subscription revenues for other people and themselves, they're valuable. In fact, one of the companies that we're studying right now is Brookfield Infrastructure. Dividend sleuth Ted is about to release another piece on that. We already put the SWOT analysis up. And one thing to keep in mind with them is they just bought Cincinnati Bell. Probably for the same reason that I've said the CenturyLink is a takeover target, is that there's a backbone there that supports the 5G infrastructure. CenturyLink is like second or third in the world for fiber optic. You know, those signals don't just originate up in the air. They start on a fiber optic cable. So CenturyLink's underlying assets are irreplaceable. And ultimately, I think it makes sense for a Brookfield Infrastructure Partners or a Google to buy CenturyLink. And that's the sort of thing that we really have to break down in our head, is where is the money really being made? And we have to avoid what, say, Altria investors are doing, which is, well, they used to be a great company and they'll figure it out. They're not. They're not going to figure it out. And I can tell you why. On every trip I go to Vegas, I go to a dispensary and I check it out. I don't really use, you know, I mean, I've tasted a couple of the edibles. However, what I can tell you is that the brands that are in there are not Altria. They're not Philip Morris. There are brands, and I said this a couple of years ago during the first cannabis speculative boom, was that it's not the growers that are going to make the money. There's more weed on the planet right now than we've ever had. If we stop growing weed right now, we'd still have weed to smoke in 5 years. That's how much weed there is. But there's certain brands that are starting to gain traction. So if Altria wants in on that, they're going to have to buy those, and it's going to cost them a fortune. Or when the federal law finally changes, right, they can get into the United States with their own brands. But they're so far behind that I just don't see them ever really catching up again. And the future really is more in edibles than smoking. I think that has become abundantly clear to me. So for all the millennials looking, listening, yeah, I've done some deep dives into blockchain and cryptocurrency, and actually I've been doing it for 4 or 5 years on that. So I've owned Bitcoin for way before the boom. And I went to college too, so I know what weed is. But it's really going to be a brand-driven thing. So, you know, there's a lot of things that we really need to dive into when it comes to how all of these things are changing. So I do believe that Ford and Delta are very advanced in their technology. I think that they both can get into defense contracting. They are ahead of Lockheed Martin and General Dynamics on some of this stuff. And it's because they made the commitment to R&D years ago. And now they are in a small handful of companies that are really advanced. In fact, I'm not really excited about airlines in general. But if I had to pick one, I'd definitely pick Delta. I think Delta is going to blow away your Southwests of the world. Why? Well, Southwest made a horrible error, in pushing Boeing to build the 737 MAX. The plane is designed wrong, not only in the software, but the airplane is just wrong. It's from an engineering standpoint, it's built wrong behind the wing. So Southwest did that because they wanted to not have their pilots have to be 757 and 737. Well, I would tell Southwest, given that you have among the most canceled flights out there, I checked, they need to just get enough pilots to fly the 757 and buy those, because they're short on airplanes right now. So they ought to get out of their contract with Boeing or flip it over to 757s, which I think everybody's going to do, actually. I think the 737 MAX is dead. I don't think it's coming back. Any more thoughts on energy and EVs? Yeah, I think that, like I said, we are on the exit plan from fossil fuels, and we're looking for rips to sell. Some of these companies are becoming so profitable in the oil space, the Permian-based companies, that we're still going to be using 100 million barrels a day of oil in 10 years. So where do you make your money on these Permian stocks? Well, I still think Chevron and Exxon buy a few, but if they just start kicking out gigantic dividends, the people will chase that, and that'll push the prices up. In the meantime, you have a lower cost basis than the people who buy down the road, so you're getting a pretty good dividend yield. I mean, Occidental is what, 7% right now? So if you're adding Occidental down at 40, where we were talking about it again, you're doing all right. It's already up 15-20%. The natural gas plays, I don't think they're going to be, and this is a mistake I made a few years ago, I don't think that natural gas is going to be the bridge fuel that people think it is. And in fact, I think the best gas plays are those same oil stocks in the Permian, because now they're starting to get takeaway capacity on the natural gas, which they never got paid for before. So the natural gas pure plays up in Marcellus, they'll stay in business, and they have to right size. Companies like Antero have been doing that. Antero's not going to go broke. But could their stocks stay under $5 for a really long time? Yeah, it could. Now, could it go from 2 to 5? Yeah, and that's doubling your money. Could it go from 2 to 5 to 8? Yeah, that could happen too. Would I have it be a big part of my portfolio? No. Why? Because I think some of these Internet of Things stocks, some of the companies that benefit from blockchain, some of these companies are going to make a lot of money, and it's going to be subscription-based revenue that lasts a really long time. Selling natural gas requires a lot of input to get your output. Now, the one thing that I think could drive natural gas is if a Democrat wins the presidency, you're going to see coal get summarily crushed, because we'll jump back into the Paris Agreement. The EPA is going to get fangs, and coal's going to get wiped out. So whether coal gets wiped out in the next 5 years or the 5 years after that, that's the only question with coal. It's gone in a decade. I mean, it'll be used for emergency things. And in fact, my belief is that we stop exporting coal. I think that'll be a policy, right? We didn't export oil for a long time. By executive order, the president can say no more coal exports. Do you really think that's not coming? So that would be the thing that would drive natural gas, because then all the coal plants in India and China, which we just agreed to sell more natural gas to, would have to convert. So I do think India and China could be the linchpin for a mini renaissance for natural gas. But ultimately, we know that solar and battery technology has already caught up to most fossil fuel generation, and 10 years from now, it'll be way better. So, and then natural gas will probably be a little bit more expensive. So all these curves, right? The lowering cost curve for alternatives, but the gradually over time rising cost curve for fossil fuels, you know, we're somewhere in that area where the two lines are about even, but they're going in different directions, right? Just because natural gas got cheaper for a decade doesn't mean that's the long-term curve. That's just a wiggle in the line. So ultimately, do you want to be in fossil fuel investments? The answer is only the handful that are going to be able to sell profitably in the future. And there's not a lot of them. Some of those companies have so much debt, they'll never get out from under. It's just like the deep water drilling companies. They're toast. They're toast. You know, you hear about Exxon's discoveries in Guyana. They're never going to develop most of that. They're not. Almost none of the offshore stuff off of South America is going to get developed. It's too expensive. Too much big up front. So you don't need natural gas for hydrogen. So you know, stick with the disruptors and gradually get out of the disrupted. That's the overlying message. And stop fighting it. It's not going to change. The new and better always beats the old and bad and worse. Doesn't matter what it is. New and better beats old and worse. 99% of the time. So, all right. I actually had a little bit more. So I'll just cover this really quickly because we're already getting to an hour. Who will drive the tipping point in EVs? This is something that I have through Boston Consulting Group. They gave this to people who attended their panel. I covered it already a little bit. The bottom line is that there's not a technology for gasoline to meet the mileage requirements that are coming. And what's coming, even if Trump short circuits it short term, is much more strict than what's already on the books. So by 2030, it's going to be really expensive to buy an ICE car. Why? They're probably going to tax gasoline at some point, or they're just going to say, hey, you know, if you want to buy a gasoline-powered car, you know, there's a 20% excise tax on that. So now all of a sudden your $20,000, you know, compact becomes a $24,000 compact. Might as well buy an EV, right? So that's coming. Splunk did an interesting piece that I haven't read yet. I just kind of glanced at it. But it's predictions for 2020, and they focused on AI and IoT as well, and blockchain, right? So all the things that we talked about today, it's all coming. There's a lot of focus on it. And what we have to do is not get sucked into the hype cycles, right? So we want, let's see here, somebody can, right? Take a look at the hype cycle, this chart here. There we go. Think about where we are with different things. Okay. Cryptocurrency was up here, and now it's on its way down. It'll eventually bottom out in price, and then we'll have some adoption. Everything goes through this. Buying down here is all right. Buying up here is not a good idea. Buying down here might not be the fortune you can make on this trade, but over the long term is a great investment. So in general, we're looking for things down here. every now and then we're on the cutting edge over here. And some of the AI still has a rocket ship before it settles in. So we might have some trades, some 1 year to 2 year trades. But ultimately, a lot of things we can buy down in here and then just make our way making a lot of money for a long period of time. If I'm right and there's a correlated correction, a lot of things drop all at once. It takes the pricing problem out of the way, right? So if everybody's angry and sad and hates everybody for a while and wants to sell everything, that's when we need to buy. We want this. We want everybody to hate everything. And we can buy the best stuff. All right. I'm going to actually call it a day. It's been an hour. And I'm writing an article or two over the weekend about what's going on right now with trade, what's going on with the markets in general. And I've got a lot of quick thoughts that I'm going to put out about some of our companies. And, keep an eye on that over the next week or two. My girlfriend is going to Europe for 10 days. So that's back-to-back 80-hour weeks for me. I'm just going to work and drink a lot of soup because one thing I did notice, I walked 18 miles one day at CES. I'm getting old and I'm really out of shape. So I got to start fixing that up. The new very short list, as I've said 17,000 times, will be released at the end of January. And you'll see some of the new companies that are on there. And you're going to see a lot of companies taking off. Some of the companies that we had hoped would do real well aren't. They've just fallen behind. And I don't want anything to do with them. There's no reason why we have to keep track of 1,000 stocks. We've got it whittled down to between 150 and 200. Those are the companies to focus on. And honestly, the bifurcation coming in the market is going to be massive. I'll predict right now that the S&P 500 will not beat inflation during the 2020s. It'll go up because there will be inflation, but I can see the S&P 500 basically making 2% above whatever its dividend rate is. So I think you might average 4 or 5% per year in the S&P 500. And that's going to be because there's so many bad companies in with the good companies. So our job is to split this in half, say, okay, who's in the crap bucket, and who's building the mansions. And about a third of the companies in the S&P 500, I believe, will drop somewhere between 50 and 100% over the next decade. A third of them. That's how far behind they are and how bad their finances are. There'll be some take-unders, some takeovers, some mergers, but a lot of companies, somewhere in the range of 150 companies in the S&P 500 are in really big trouble. So we want to avoid those. Not buying the index is one way. And then focus on the companies that are going to be your blue chips of tomorrow, QQQ, and companies that are going to be the up-and-comers. So we have a couple funds for that, and then we can buy stocks as well. All right, have a great weekend, and I will talk to you next week, and I'll have this report done by the end of the month.